$44.8 billion for a spice rack is actually a bargain.
A bargain? Nate, Unilever is paying a massive premium just to corner the market on garlic powder. The regulatory headache alone will cost them $1 billion.
You just hate synergies. Fine. If you want boring, we can talk about Brookfield dropping $3.2 billion on UK pensions.
Boring? That is exactly where the real money is hiding.
We will see about that. Plus, Netflix just walked away from Warner Brothers. The rundown. Netflix pulling out at the 11th hour is classic corporate theater. Paramount Skydance just walked away with Warner Brothers Discovery.
Walked away is a very generous way to describe inheriting a mountain of linear cable debt, Nate.
But the IP, Maya. You get Batman, HBO, and the Paramount lot in one massive Frankenstein media entity.
A Frankenstein that still has to figure out how to make streaming profitable while paying off pitchfork-wielding bondholders. I am looking at the debt schedule, and it is genuinely terrifying.
Speaking of terrifying numbers, market strategists are tracking a $4.9 trillion global M&A wave right now. Trillion with a T.
And surprise, a huge chunk of that is pure AI panic buying. Look at OpenAI, they just snapped up Astral and PromptFu.
PromptFu sounds like a fake tech company from a sitcom.
It is an open source developer tool and an incredibly smart buy. OpenAI is quietly acquiring the entire developer ecosystem while everyone else is distracted by their internal board drama.
I still think that 4.9 trillion number is mostly bankers slapping an AI premium on traditional deals to juice the fees.
I completely disagree. Look at the biopharma numbers for Q1 2026, $47 billion across 19 deals. Gilead just dropped $8 billion on Arcellx alone. That is not AI hype. That is legacy pharma realizing their patents are falling off a cliff and they need new pipelines immediately.
Okay, fair point. Panic buying is a universal language. You know who else is making moves? South Korean private equity firm Hahn Co is offloading K-Car to a KG Group consortium for $830 million.
Offloading is the wrong word. K-Car is the biggest used car platform in the country. Hahn actually got a really solid exit multiple there.
It is just refreshing to see a physical deal. You can actually kick the tires. Not like the absolute circus happening with the Telegraph right now.
You mean Axel Springer crashing the party?
Exactly. The paper reportedly sold to a German buyer for £575 million, and now Axel Springer joins a rival bid just to stir the pot. Media deals are basically high school gossip with better suits.
Which brings us perfectly to the biggest whisper on Wall Street today, and it involves a lot more than just gossip.
Oh yes, grab your salt and pepper.
Unilever and McCormick are reportedly circling a $44.8 billion merger. The big one.
$3.2 billion for a company called Just Group, which sounds like an indie band, but is actually a massive UK retirement services provider. Brookfield Wealth Solutions just officially closed this thing, and Maya, I am obsessed with this play.
You just love any deal that involves the phrase pension risk transfer.
I really do. It's the ultimate banker magic trick. A massive corporation says, hey, we have all these retired employees we owe money to until they die. Please take this headache away. And Brookfield swoops in, takes a giant pile of cash up front and says, don't worry, we'll pay the pensioners.
Right? And then Brookfield takes that giant pile of cash and invests it in their own alternative assets. That's the whole model. They're buying £2.4 billion of permanent capital. But Nate, look at the actual demographics here. You're betting that your private credit yields will outpace British life expectancy.
Which is a totally reasonable bet for a shop like Brookfield. They have the scale to absorb it.
I disagree. The UK pension regulator is notoriously strict. You can't just take these annuity premiums and dump them all into illiquid real estate. There are massive capital requirements. I was reading the closing filings this morning, and the amount of hedging they have to do on interest rates and inflation is staggering.
Sure, but look at the broader landscape. Fitch just put out a note on Athora buying Pension Insurance Corporation, saying it massively boosts their financial performance. The playbook works. Everyone wants a piece of the UK annuity market right now.
Because the upfront cash looks amazing on a balance sheet, but it's a 50-year liability. You're marrying these pensioners, Nate.
I've had worse dates. Look, Brookfield is essentially building an empire on the back of global aging. They're playing a half-century game while everyone else is stressing about quarterly earnings. I respect the hustle.
It's a clever structure, I'll give you that. The individual annuity market in the UK is exploding, and Just Group gives them immediate massive scale. I just worry about what happens if we get another inflation spike in 5 years. Those liabilities aren't static.
That's future Brookfield's problem. Present Brookfield just locked down billions in fresh capital to deploy.
Spoken exactly like a guy who used to build pitch decks. Take the fee today, ignore the tail risk tomorrow.
Hey, I resemble that remark. But speaking of massive scale and ignoring tail risk, my phone has been blowing up all morning about some serious spice aisle drama.
Oh, you mean the whisper that Unilever is trying to swallow McCormick for $44.8 billion?
Exactly. We need to talk about the great mayonnaise and mustard monopoly of 2026. Voices. I am looking at this note from market strategists claiming global M&A is riding a $4.9 trillion wave. And the reason? Everyone is scrambling to adapt to AI.
Scrambling or just slapping the word AI on their press releases. I read that exact report. Yes, OpenAI is buying up Astral and PromptFu. Sure, but you cannot tell me a $4.9 trillion wave is just tech panic.
Fear is a phenomenal motivator, Maya.
So, is aging demographics. Look at the Fitch ratings note this morning.
The one on Athora?
Right. Fitch says Athora buying Pension Insurance Corp significantly strengthens their risk profile. We are seeing a massive roll-up in pension risk transfers. That has zero to do with artificial intelligence.
Fair. It fits the Brookfield narrative perfectly, too. They just officially closed their $3.2 billion buyout of Just Group. The UK pension market is basically an all-you-can-eat buffet right now for asset managers.
Exactly. It is yield hunting, not robot hunting.
Okay, but what about the consumer space? The loudest whisper on Wall Street today is Unilever and McCormick.
The Spice Rack merger.
The Spice Rack merger. $44.8 billion to combine their food businesses. You combine Hellmann's Mayo and Old Bay? That is pure synergy.
You just lost all your former banker credibility right there.
I stand by my culinary M&A takes.
I actually want to see the term sheet on that one. Unilever has been trying to fix its food strategy for years. But regulators are going to completely lose their minds over that kind of grocery aisle monopoly.
Oh, absolute nightmare. We are definitely watching Washington closely on that tomorrow. Speaking of tomorrow, we need to talk about Bank of Hope making an all-cash run at SMBC's commercial banking unit. Spill the tea.
I'm sorry, but putting Old Bay seasoning on a tub of Hellmann's mayonnaise does not justify a $44.8 billion valuation.
You lack vision, Maya. Think of the synergies. Unilever has the boring pantry staples. McCormick has the flavor. It's a match made in grocery heaven.
It's a match made in antitrust hell. You really think regulators are just going to wave through a $45 billion food giant? They're going to scrutinize every spice rack in America.
Oh, come on. Nobody is monopolizing paprika. The global food market is incredibly fragmented. They're just trying to build a moat against private label brands.
I strongly disagree. I'm looking at their retail distribution footprint, and the shelf space overlap is massive. The FTC is going to have an absolute field day with this. Watch regulators start making noise about it by tomorrow morning.
Wall Street loves a mega merger rumor, though. My old banker buddies are probably salivating over the advisory fees on a $45 billion ticket.
Exactly. The bankers win no matter what.
Well, if you want real drama, look across the pond. The media circus in London is getting so messy, I almost respect it. Axel Springer is now stirring the pot on the Telegraph bid.
Wait, really? I thought that deal was completely baked. Didn't a German buyer just lock it up for £575 million?
That was the narrative yesterday, but Axel Springer just crashed the wedding. They joined a rival consortium at the absolute 11th hour. It's classic media billionaire behavior, pure ego, pure chaos.
I love a crashed wedding, but I want to see the actual term sheet. Are they putting up real cash, or is this just tactical noise to force the other buyer to overpay?
Spoken like a true skeptic. We'll find out who actually writes the check soon enough. Speaking of actual cash changing hands, I want to talk about Brookfield throwing $3.2 billion at the UK pension market.
Yes, finally some actual closed deals. Show me the math on Just Group. Tomorrow's radar.
I am still hung up on this Unilever and McCormick rumor. $45 billion for a spice rack.
It is not just a spice rack, Nate. Keep your eyes on antitrust regulators tomorrow. They are going to absolutely hate this tie-up.
I actually disagree. The food space is highly fragmented. They can easily argue it doesn't hurt the consumer.
Oh, come on. You try telling the FTC that cornering the global market on garlic powder is a massive win for the middle class.
Fair. But strategists are tracking a $4.9 trillion M&A wave right now. Most of it is companies panic buying AI tech. Spices feel incredibly safe.
Boring is where the money is. Tomorrow my screen is strictly on financial services. Bank of Hope is pushing forward with its all-cash acquisition of SMBC Manubank's commercial unit.
Right, and keep an eye on Axel Springer stirring the pot with a rival bid for the Telegraph. Media drama never sleeps.
Neither do we. We will be back tomorrow to break it all down.